Hello, welcome. Thank you for joining us. As you're coming in, please let us know where you're tuning in from and if you know anyone that may benefit what we're going to talk about today, which is protecting and growing your retirement account, even with market uncertainty, economic uncertainty, all of the above. Then share this out, tag somebody you know that may want this information, and make sure you grab something to take notes with, okay? Because, oh, I didn't even hit live. Because this is going to be some information that you really want to know and apply if this is for you, if you have a retirement account with a current employer. Maybe you have a 401k. Maybe you have a 401k from a previous job and you just never did anything with it and it's still sitting there as a 401k. This is also for you if you have an IRA, a Roth IRA, if you have a TSP or a 403b. So those are some of the different types of retirement accounts that we're going to be talking about. If you have any of those accounts and you have money in them and you're concerned about what's going on in the market right now, then stay tuned, grab something to take notes, and pay attention because we are going to help you in what you need to do to protect and grow your retirement account. All right, so as you're coming in, please let us know where you're tuning in from. And if you have any questions as well, feel free to put them in the comments. We'll do our best to answer them live. If we don't answer your question live, then we will get to it. We'll come back and we'll message you. We'll address it. Okay?
Unless you're tuning in from the bathroom, then keep that part to yourself.
Well, the area, like state,
what city and or state?
Yeah.
Not which part of your house you're tuning in from.
Yes. So, and also Rain did the text go out letting everyone know that we are live now. If you could just put in the comments and let us know. Rain is also in the comments. So if you have specific questions, if you have any trouble getting in or anything like that, I guess you won't be in here writing comments if you're having trouble getting in. Okay, so are you ready to get started? All right, so welcome to how to protect and grow your retirement. If you don't already know who we are, we're Martin and Chelsea Matthews, and I'll tell you a little bit about who we are and why we're qualified to talk about any of this stuff. We're founders of M Wealth Group. We have clients in 48 states. We have a combined 21 years of experience. We've been doing this since we were in diapers. No, we just really look good for our age. We lead an agency of associate advisors. We've held multiple licenses in the fields of investment advisory, securities, and insurance. And we're also co-authors of this book, Let's Fight About Money, helping couples communicate about money, handle conflict, and build an unbreakable financial house. Also, I want to mention, if you are watching on Instagram, we do have some slides in this webinar that you will not be able to see. So if you would like a replay or if you would like access to the slides and you're watching on Instagram, you can comment or message us privately and you can just say slides, or please send me the replay, something like that. All right, so we help individuals and businesses properly use cash flow to create personal wealth. And our mission is to deliver results to help our clients build an unbreakable financial house and business so they can be free to live life by design. And what that really means, you've heard me mention unbreakable financial house a couple times already. If you don't know what that means, it really means being able to, all of your finances are unbreakable, unshakable. You can handle anything that comes your way. But it's even more than just being able to pay your bills and handle things financially. It's really having the resources, the time, and attention to be able to create the life that you truly want to live, make the impact that you truly want to make in your life, your family's life, your community, and beyond. As big of an impact as you want to make to be able to really reach your true potential. That's what is really our mission in life and in our business. And we believe that the lack of financial education is one of the greatest economic crises. And the way that we are solving that is by helping people to build an unbreakable financial house. And the way that we're doing that, the way that we deliver this information to you in our business, in this webinar, is really these three things here: knowledge, responsibility, and control. We don't tell you we're so smart, just do what we say, follow us. No, we want you to think for yourself, and we want to help you to increase your knowledge so you can take more responsibility of the actions that you take in your life having to do with your finances. And really what that does is you have more control over your life, your finances, your results, okay? So like you control your money. Your money is not controlling you. You control your life. You're not a victim of your circumstances, right? We want to empower you with the information you need to make the right decisions for you and your family. And this right here, I'm going to introduce to you. This is actually what makes up your financial house. There's 6 areas. We're not going to address them all. We have resources for each and every one of these. We're going to focus in on one of these building blocks. But it's important to understand what makes up your financial house. We're all building a financial house, whether you realize it or not. You may have a financial shack, you may have a financial empire, and you may be somewhere in between. So it's important to identify, what makes up your financial house, these 6 areas. And then once you know what those areas are, you got to know, how can I strengthen them to then move towards that unbreakable financial house? Okay, so today we're going to focus on building block number 5, which is build wealth. Okay, and Martin is going to talk with you today about, the things that you need to be looking at and thinking to increase your knowledge, take more responsibility, and have more control when it comes to your retirement accounts.
Yeah. So look, there's a lot of talk about the economy. We're in what's called a bear market. A bear market is defined as 20% drop from stock market high. So S&P 500 is down 20% from where its recent highs. So that's considered a bear market. A bull market is when things are trending up, and things have been recovered and things are going in the direction. Everybody wants them to go up, up, and up. However, when you have the bulk of
get it up and keep it up.
Get it up and keep it up.
That's our motto.
That's a motto we have here. So when you are building for retirement, whatever retirement means for you, or whatever definition you have for retirement, whatever it means to you, whatever all of that, when you are building for retirement, your projections have to be accurate, and it has to be as predictable as possible. So what you want to do is you want to eliminate the unpredictability when it comes to your retirement plans. And so whenever you have the variables of a market that's going down, you have to then factor in, okay, how can I still stay on track if my accounts are going down? What are some of the things I need to be thinking about when it comes to this block of money that's called my retirement account? So this is some of the parts I'll get into. We'll talk about what to do when you have a current retirement account or an old retirement account where you're no longer working at a company anymore and you've left, all of that. So let's dive into those pieces right now. Okay.
I think it was a group effort, Brandon. He said, who came up with that motto?
Oh, get it up and keep it up. So here's some tips on handling a current 401k. Current 401k means you are currently working at a job and you have a 401k plan there that you're currently contributing to. So the first thing you got to do is log into your account and review your statements. Sometimes people don't know how to do that. Maybe when you started a job, you fill out a packet that talked about your benefits, and then maybe you sign up for a 401k when you were eligible to, and then now you're not exactly sure what to do from there, or you don't open your statements, so you may not know exactly. It's on automatic. You're just kind of used to contributing every time. So number one, log into your account, review your most recent statement so you can get a sense of where you're at. And the reason you do this is because you want to see how you're allocated. with a 401k is technically not an investment. Think of a 401k as a basket, like a shopping cart. So you go to, not like an online shopping cart, but like you go to the grocery store and you got a shopping cart. And then you choose what investments you want to put into that shopping cart. So in your 401k plan, you have chosen certain, it could be stocks, bond, mutual funds, or something called ETF, which is exchange traded funds. Those are generally the normal investments inside of a 401k. So inside your 401k, you have several types of investments. You need to see how your investments are allocated to see if that matches up with your level of risk, your risk tolerance, and if it's in line with when you're planning to retire, and if it fits for your risk tolerance. So that's what you need to look at when it comes down to your 401k, your current 401k. Get your statement, log in online, should to see something on there, look at how you're currently allocated. And if you come to find that, hey, maybe I'm allocated way more risky than I want to be, you can actually reposition within your 401k plan. You can choose different fund options within your 401k plan. A lot of times people will just sign up for a certain fund in their plan and never change it. So this happened to me when I first came to America, and I got my first job where I got a 401k plan, and I signed up for it. I didn't understand how the hell it worked. I just signed up for it because that's what was available and everybody told me they were doing it. So I signed up for it and I checked a few boxes. And for like 4 years, I never looked at it. I never saw anything about it. I didn't know what it was invested in. I didn't know what it was doing, nothing. Money just came out of my paycheck every 2 weeks to go into the 401k plan. And I had no idea what was happening with it. So now, of course, this was many, many years ago. And I'm like, okay, I have to become financially literate if I'm going to operate and be here in America. I need to learn these things so that I can be competent with it. And that's how I got into the industry. But it was because I wanted to learn and understand things for myself so that I can, if it was a value, then I could show it to other people. So when you start understanding that, you can make changes within your current 401k plan and choose different investment options within your plan. A lot of plans will allow you can do this once a month or a couple of years, things like that. Someone says jobs are horrible about teaching employees about 401k. Yes, absolutely. There's a lot of legal reasons for that. Sometimes the job doesn't want the liability because years ago, people would sue their employer based on the 401k plan. Like if you give the employee any advice, like if you said, let's say it was a publicly traded company, like there was a company called Enron that went bankrupt. So if it was a company like Enron, the executives were telling people, yes, just buy Enron stock in your 401k. That's the best thing you can do. Well, Enron went bankrupt. And so the employees were like, you told
me.
You told us to buy Enron stock. And so the employees got pissed off. So then employers were like, okay, we ain't telling you shit anymore. You do what you want to do. You check those boxes. We can't give you any advice. Well, legally, they're really not supposed to give you any advice because the advice can be biased, like in the case of Enron, telling you to buy Enron stock. Of course, the more Enron stock the employees bought, the better it looked for Enron, but they weren't buying it because they really wanted to. They bought it because their executives told them to. So anyway, but yes, a lot of companies do not provide education for 401k plans. In the past, we've gone and set up 401k plans for companies. We've gone and set the plan up. We've done some education on what it is, how it works, things like that, because some people wanted to be aware of it. But very important for you to understand that you can change the allocation. A lot of times you can change it if you need to. You may not need to change anything. But if you need to, you can change the allocation sometimes once a month, sometimes once a quarter to allow you to do that. It is not a taxable event when you do that. You're just switching funds within your 401k plan. The money doesn't leave your 401k. You just switch from one fund to another fund within your current 401k plan. So it's something you can do if your plan, the investment choices in there no longer fits with your risk tolerance. Okay. Anything else you want to add on that? All right. So now we're going to go to how do you handle an old 401k? So an old 401k is defined as, it's from an old job. You're no longer working at the job anymore, and you have this retirement plan. In the military, they get something called a TSP, called a Thrift Savings Plan. When you leave the military, you're no longer active anymore. You're not a veteran, so you can do the same things. You should look at your TSP. If you work for university, or if you work in public service, sometimes you may get something called a 403B. So 403B, 401k, TSP, they all work pretty much the same. Have generally the same tax rules, things like that. So what you want to do is still want to review your accounts. Now, if you have an old 401k, you can actually do what's called a rollover. You can roll your money out of that company's 401k plan and roll it into your individual retirement account. The reason why you may want to do that, depending on if it fits for you, is because you may have more choices and more things you can do with it than you could in your 401k plan. For example, you may want to use it to buy real estate. Let's say you invested in a 401k because that's what you were being offered. But now you want to use your retirement account to buy real estate. You can actually roll your money over into an IRA and have it be something called a self-directed IRA, where you can then buy real estate with it. Maybe you don't want to be in mutual funds anymore. You don't want to be in the stock market anymore based on that. It's all up to you. But your old 401k plan has only a limited amount of options that your previous company provided. Now, that all these things we're talking about at the end will show you how to get more from us, how you can get a retirement review, and how we can help you look at what things might make sense for you based on what you're trying to do. So anyway, I'm going to go over a quick example of an actual client who rolled some money over to us using one of the strategies that we talked about, because this client wanted to make sure that they got a check every month for the rest of their life. And there's some ways to be able to do that with some financial vehicles. So I always tell people retirement plans is about cash flow. So let's say you have $1 million in your 401k plan. You're not going to spend the $1 million all on day one. You're going to convert the $1 million into ongoing cash flow. So if I'm going to convert this money into ongoing cash flow, it's very important for me to have a plan for cash flow. How much cash flow is it going to generate? What is it going to do for me? And what if I'm still working, but I have this old 401k and I don't plan to retire for another 5 years, 10 years, 20 years? How can that money still be growing while I'm waiting to start taking income or taking cash flow from that account? So here's an example I'll show you. This is a recent client. This is 5/4/2022. This client rolled over $400,000 with us. So this is a client I was concerned about making sure they had enough money for retirement, things like that. So the client is going to be taking income from this in a little while. But if we look at it, the client's account currently today, as a month later, is at $480,000. So the client's plan is to use this particular type of strategy for income. The client's not going to withdraw all this money at once. The client is planning to use this for an income stream, for cash flow. And so this client wanted to protect some of their money from some market risk. So that's what we're able to help them to do. So they're able to protect some of their money, and they got a bonus. So now they went from $400,000 at the position here to $480,000. And how this plan is structured is the client will receive 10% per year for the first 10 years, and then 5% per year after that, before they start taking income, so that their accounts can continue to grow. So this is one of the ways that a person can grow their retirement funds even when the market is down, because this is protected from market risk. So this is some of the different things that people can do as they're considering planning for retirement. Hey, I have an old 401k somewhere. I left a job. I'm no longer working there, things like that. There's a lot of talk about recession. What happens during recessions? People get laid off. When you get laid off, you have an old 401k, you may want to start considering what would you do if that occurred, or if you just change jobs because you're looking for a different opportunity. You may have old 401ks somewhere. You don't want to just leave it there like an abandoned child. It's money that you worked hard for and you put there. So you don't want to abandon it. You want to make sure you're looking at it and doing smart things with it. And then lastly, how do you handle your current IRA or Roth IRA? So IRA stands for Individual Retirement Account. Individual Retirement Account. And if you guys like this content, please share, invite other people, all of that. Someone asked, is there an early tax on that, talking about if you do a rollover. If you roll from a 401k into an IRA, and and the transaction completed within 90 days, so which means I have old 401k, I request a distribution that I'm transferring into an IRA, so I'm doing a rollover. So I'm rolling it over into an IRA. It's not a taxable event. If I withdrew the money out of my 401k and I just kept it in my bank account, after 90 days, that will be considered a distribution. Because 401ks have not yet been taxed, the money in your 401k has not been taxed. It's taxed when it's distributed to you. So when you take a distribution out of your 401k, if you don't put it into an IRA within that 90-day period, then it counts as a distribution and you have to pay taxes on it for whatever the taxable amount would be based on how much you pulled out. So, but when you're doing a rollover, it's not a taxable event. You're going from what's called a qualified plan, which means the tax qualified plan, which is what a 401k is. It qualifies for you to defer the taxes, meaning I don't have to pay the taxes right now. I'm going to defer the taxes and pay the taxes later. So when you do a rollover, that's essentially what you're doing. You're going from a 401k qualified plan, it's called going to an IRA, which is a qualified structure, and so there's no taxes to do that transfer. So so you just set it up that no taxes are withheld. The amount of money you have in your 401k that gets transferred over, boom, same amount hits, and now it's now in an IRA. With an IRA, you have more options and more choices on what you can do. It's very easy. It's a lot easier to move it from one company to another company. You can do different things with it. What are you looking at?
I was looking for a pen.
A pen?
Yeah.
I always keep my pen in these pockets.
Got it. Thanks.
Yes. So so those are lots of things that you can do. A lot of advantages to where a person might, especially if they want more investment choices, to where they can look at an IRA, rolling over to an IRA. A Roth IRA. So Roth IRA is where you put money in after taxes, which means just like in your bank account, you pay the taxes on the money in your bank account and you fund a Roth IRA. The reason why people might use a Roth IRA is because if you've had the Roth IRA for 5 years and you are over 59 and a half, the gains that you've made are tax-free. So if you've had the Roth IRA for 5 years and you are over 59 and a half, those two conditions need to be met. The gains on there would be tax-free. Yes, Daniel, it will be on our YouTube channel. So you guys can make sure to subscribe. We post on YouTube every day, something related to personal development, financial development. So yes, this video will also be on our YouTube channel where you can see slides and things like that. So awesome. So a Roth IRA was named after a guy named Senator William Roth. The government actually tried to do something that was tax-free. Good for them. They have some limits though. There's some limits on how much you can put in. There's limits on if your income is above a certain amount, the limit you being able to use a Roth IRA. But otherwise, generally speaking, most people can qualify for a Roth IRA. They can do that. You can also convert your current IRA into a Roth IRA. When you're doing that switch, you'd have to pay the taxes on there. So it may not be the best move for most people. But if you have a small IRA, let's say you got maybe $5,000 or $10,000 in an IRA, and you're like, hey, you know what? I want to convert this traditional IRA to Roth because I'm still young, maybe in your 30s, and you're like, I'm going to be saving for retirement for another 30 more years. Maybe what I want to do is convert it to a Roth and then make sure that the gains I make from this point forward will be tax-free. You can do that too. All of those things are part of what we go over in the retirement review to help you understand what's the best thing you can do for you. So Chelsea's going to go into that point.
Yes. So if you have a retirement account and you would like help reviewing your account to see where it's at, what options you may have to protect from losses, to grow it, then we are offering a free retirement review. Now, usually we require that these accounts have $100,000 or more to do a free review. However, we're opening it up to if you have at least $50,000 or more in your account, you can request a review. You can go to 6buildingblocks.com/retirement. Again, 6buildingblocks.com/retirement. If you know anybody that this may apply to, you can share this stream, you can share this link. It's probably best if they watch the video to kind of get some context on what we're talking about and how we might be able to help. But we really want to help people to create more certainty in these uncertain market, uncertain economy. And, you know, your retirement account is something that you have to be able to rely on, that you're going to have enough money when you need it, and it's going to last as long as you do. Okay, so we want to help you to secure that, to create more stability and more more security in your finances, in your financial house, so you can build that unbreakable financial house. So 6buildingblocks.com/retirement. If you have any questions, you can feel free to reach out. And again, if you're watching on Instagram, you could DM us, you can comment in there, or you can go to 6buildingblocks.com/retirement.
Yeah, and so we're going to continue to educate people in this particular subject because most economists, not that they're always right, but most economists are predicting there's going to be a recession. Part of the reason for that is you have very high inflation. And so the way the Federal Reserve handles inflation is they raise interest rates. When they raise interest rates, people are less likely to be investing. Companies don't do as well because now it costs them more to get financing for expansion. People may not buy properties as much, all these kinds of things, and the economy tends to contract whenever there's a recession. Companies start laying people off. When people get laid off, it makes it harder for them to pay their mortgages, all these different things, okay? Whenever there is a contraction in the economy, it affects your retirement account. And then whenever there's a recession in America, you start to see it trickling other places because there's goods we import from other countries. Well, if jobs are not, people aren't working as much and the job market is shrinking because people are being laid off, then we're not importing as many stuff and buying more stuff from other places. So as a result, that's what ends up happening. So there's a contraction. What it means for you and your retirement account is as you start to see that more and more, you start to see more downturns in the market where most people have their retirement accounts invested. So we start talking about these things now. We've been talking about this for a while. We're talking about inflation for years. We started heavily talking about inflation a year and a half ago as the government was printing more money because that tends to follow that. You tend to see price inflation after that. So now we're talking about what you need to do in down markets. We've had a down market. The market's negative this year. S&P 500 as of today is down about 20% this year. So that means people's retirement accounts are taking a hit. You've got to be proactive on this subject. So that's why we're doing this education. That's why we're doing some of the reviews. That's why we lowered the minimums for some of the clients that we're maybe working with to help you with planning and positioning so that you can take advantage, not fall backwards, but actually be able to advance and actually even grow your account no matter what the market is doing. So as Chelsea said, if you'd like that, make sure to go to 6buildingblocks.com/retirement and you can request your free review there. All right, so we'll see you guys next time, and thanks for watching.
Bye.